Well, the big pop in futures trading after JPMorgan's results came out has faded a little bit. The Dow futures are now up by only 2 points, and S&P and NASDAQ futures, as you can see, have turned lower. While CIT may be failing, JPMorgan earnings are much better than expected. Hank Paulson called on the carpet on Capitol Hill. It's a very big day for the financial industry. Joining us to discuss all of it, William Cohan, whose latest book, House of Cards, detailed the downfall of Bear Stearns. William's a former investment banker at Lazard and JPMorgan. Of course, that was before they added Chase. Let me quickly start with their earnings.
Yes.
The Chase part did not drag them down as expected. They seem to be doing quite well on the retail side, too.
Well, I think what you have here between the Goldman earnings and the JPMorgan Chase earnings is, a tale of two cities, kind of thing. You've got the winners and losers being separated out here very quickly. Goldman record earnings, $3.6 billion, JPMorgan $2.7 billion. What's interesting is that Goldman made more money than JPMorgan Chase, but let's face it, you have the juxtaposition of Goldman and JPMorgan Chase at the same time that CIT is about to file for bankruptcy. Clearly, winners and losers are being decided in all this, and it's nice not to have much competition, let's face it.
Jamie Dimon was the face of Wall Street during the crisis. He's a central character in your book. How's he doing at his own bank, though?
Well, I think, look, if there's no competition, or less competition, and the demand for investment banking services, because it was so pent up during the last 2 years, probably has never been stronger. And you've got, a few players who can provide that. You've got JPMorgan, who can provide capital to companies all around the world when they need it. You've got Goldman with the trading expertise and just dominating there. And so Jamie Dimon is a very disciplined manager. He built this fortress balance sheet, so you would expect him to perform well at this particular moment. Again, who else is providing the loans and the capital compared to JPMorgan? Citigroup isn't. Bank of America is much diminished at this point, too.
Well, those two are doing particularly well. They both paid back their TARP money back to business as usual on Wall Street for those who can.
Well, why not?
Has anything changed as a result of the financial crisis?
Well, I think a couple of fundamental things have changed. You've lost a number of serious competitors. Lehman gone, Bear gone, Merrill gone. That is a serious hole in the, what used to be the investment banking fabric. The next thing you've got is basically Goldman Sachs and Morgan Stanley. Goldman Sachs saying, yesterday, they're taking their business plan hasn't changed at all. In particular. And now what they can do, since they're bank holding companies, they can back up their whole business plan, which hasn't changed, with all the risks that they take to the Fed, to the Federal Reserve. And in fact, we finance them now. And that's a big change from what happened, a year ago. So I think, those two things have really changed the whole dynamic on Wall Street. And of course, they're anxious to get back as quickly as possible to reestablish the status quo. And why not? I mean, look at Goldman. They're making so much money. They're going to pay their people better than ever, apparently. And why not? It's a great, it's a gravy train, and, it got us into this trouble. It's time to try to fix it for real, but they don't seem to want to do that.
Well, we were talking with Tim Geithner earlier. He didn't particularly want to address the issue of whether the government is going to come down on compensation. But do you think that what JPMorgan and Goldman Sachs are reporting in terms of what they're setting aside is going to anger the politicians enough that something gets done, or do they just get away with it?
You've got a symbiotic relationship that has always existed between Wall Street and Congress and the politicians, and it's amazing how much influence a very little amount of money can buy. And I don't think that is necessarily going to change in the near term. So I don't think anybody's going to push too hard to change the compensation system on Wall Street, except for people like me who believe that it is at the root of what's all went wrong here. Until you fix it for good and have these people have real skin in the game, it's just a matter of time before the next crisis that we can't even imagine is on its way to coming again.
Well, it doesn't sound like you think the Secretary Geithner's reform plan will do all that much reform.
Well, it's going to reform, or, first of all, number one is what is going to get passed. I mean, it's going to be changed dramatically by Congress before we, get anything that's into law here. But there will be changes. There'll be this super regulator, perhaps, although there's some doubt about whether that'll happen. Maybe, if you sell mortgage-backed securities, you'll have to have, keep 5% on your books. But in terms of, aside from giving nice words to the compensation system and what needs to change, there's not going to be no real impetus for change in that document. Maybe Congress Congress will step up. They've talked about it a lot. I mean, these hearings, you mentioned former Secretary Paulson in front of the House Government Oversight Committee today. I mean, that's the third in the troika between Ken Lewis and Ben Bernanke, who's spoken to that committee in the last 6 weeks. They've talked a lot about compensation. They've talked about what went wrong on Wall Street, and it's time for some action, if you ask me.
Well, we'll get some action on Capitol Hill today. You mentioned in an op-ed piece in the Washington Post some questions for Hank Paulson. I want to ask you about those coming up in just a moment, but we have to take a quick break. William Cohan will stay with us. Could the price of oil plunge to $20 a barrel? That's another question we'll be asking later in the show. It's a prediction of one expert. We'll find out why and what that might mean for worldwide economic recovery. Stay with us on Bloomberg. Another company out with earnings better than expected, Biogen, 75 cents a share on an adjusted basis. That beats the analyst estimate of 68 cents a share. They see revenue for the year up in the high single digits. Well, we are back with former JPMorgan investment banker and House of Cards author, the book detailing the fall of Bear Stearns, William Cohan. We were talking with him just before the break about testimony expected today by Hank Paulson about perhaps what happened over the last 9 months to a year or so. You had some specific questions, one in particular the committee should put to him.
Well, I mean, Hank, please tell us why all this happened, why you made the decisions that you made. I mean, the committee is basically focused on primarily what happened with the Bank of America and Merrill Lynch deal. Why did you force Bank of America to ultimately buy Merrill Lynch? Why did you not allow them to invoke the MAC clause, the material adverse change clause in the merger agreement? Why not let Ken Lewis renegotiate that deal to a lower price? Things like that. But, then if you could possibly, Hank, step back from all that and let us all know why you made the decisions that you made throughout this. Why let Lehman fail and save AIG two days later? Why throw all this money at Bear Stearns in the first place? And why not bring any of these CEOs to testify and explain to us what happened here?
Was Lehman a mistake?
Well, I mean, was it a mistake? I mean, I think the historians will have to tell us that. There was a lot of pain involved for creditors, shareholders, employees. The whole financial system seized up afterwards. I mean, I'm just reciting, the facts as to whether it was a mistake. I mean, right now, we're sitting here with Goldman Sachs with record profits, JPMorgan better than expected, and CIT about to fall into bankruptcy.
I asked about Lehman Brothers, and I only have about 30 seconds left, but do you support their decision to let CIT fail?
Well, I don't understand it, frankly. I don't understand it. You've got a business that provides, loans to small businesses all across this country. And if you let them fail, then they're obviously not going to provide those loans. And liquidity is already extremely tight for those small businesses, and you're taking out one of the major players. Makes no sense to me, but I'm not sitting there at the table understanding why they haven't done what they should have done, maybe.
No, but we thank you for sitting here with us. William Cohan, thanks for being with us this morning.